Hello everyone, welcome to the market opening bell on Friday, January 2nd, 2026, your 10-minute guide to the stock market. First, I wish everyone a happy new year, good health, smooth sailing in all matters, and big profits in investments. On December 31st, the Hong Kong stock market had a half-day session on New Year's Eve. The Hang Seng Index opened 53 points lower at 25,801 points, then trended downward with the market falling as much as 300 points to a low of 25,554 points. It ultimately closed down 224 points at 25,630 points with turnover of 118.9 billion Hong Kong dollars. The X-share index fell 77 points or 0.9% to 8,914 points. The Hang Seng Tech Index dropped 62 points or 1.1% to 5,516 points. Southbound funds net bought 3.449 billion Hong Kong dollars in Hong Kong stocks. Among them, net buys included China Merchants Banks at 724 million, ICBC 589 million, China Construction Bank 562 million, SMIC 391 million, Xiaomi 237 million, Sanhua Intelligent Controls 208 million, Jiangxi Copper 158 million, Alibaba 100 million. Net sales included Zijin Mining 680 million, Tencent 646 million, Ping An Insurance 298 million, Meituan 132 million. According to statistics, Southbound funds have net sold Tencent for 5 consecutive days, totaling 3.943 billion. In 2025, Southbound funds net bought 1.4129 trillion Hong Kong dollars in Hong Kong stocks, setting a new historical record. Since the launch of the stock mechanism in 2014, Southbound funds have cumulatively net bought 5.1107 trillion Hong Kong dollars in Hong Kong stocks through the Hong Kong Stock Connect. In 2025, there were over 60 trading days where Southbound funds net bought more than $10 billion in a single day, including 11 trading days with net buys exceeding $20 billion. On August 5th, Southbound funds net bought $35.876 billion, the highest single-day net bought in history. In terms of individual stocks in 2025, the top 10 Hong Kong stocks net bought by Southbound funds were Alibaba, Meituan, China Construction Bank, Tencent, Xiaomi, China Mobile, SMIC, Kuaishou, CSOP Hang Seng Tech Index ETF, and CNOOC. The top 10 net sold were Sunny Optical Technology, New China Life Insurance, Weichai, Power, Hua Hong Semiconductor, ASMPT, PYD, Electronic, PetroChina, Mok Vista, Ganfeng Lithium, and Laopu Gold. The Hang Seng Index fell 228 points or 0.9% for the full month of December. It dropped 1,225 points or 4.6% for the quarter. For the full year, it rose 5,570 points or 27.8%, marking the best performance in 8 years. The X-share index rose 22.3% for the year. The tech index rose 23.5%. All 3 indexes rose for 2 consecutive years. Among Hang Seng Index constituents, China Hongqiao surged 203%, topping the gainers list. Zijin Mining rose 162%, SMIC rose 124%, Hanso Pharma rose 113%, Portmart rose 111%, Innovent Biologics rose 108%, Chow Tai Fook rose 100%, Sino Biopharmaceutical rose 98%, JT Health rose 97%, and China Life Insurance rose 96%. This list is a microcosm of the combined effects of 4 main themes: cyclical resources, hardcore technology, innovative drugs, and niche consumption, represented by China Hongqiao and Zijin Mining, benefiting from global inflation in industrial demand, represented by SMIC as a core carrier of domestic substitution and technological self-reliance, represented by Hanso and Innovent, with the market focusing on source innovation and international pricing in biopharmaceuticals, represented by PopMart, Chow Tai Fook, and JD Health, showing that even in a weak recovery environment, consumption in specific niche segments still has strong vitality. Technically, the Hang Seng Index has once again fallen below the 10-day and 20-day moving averages, and downward it is expected to fill the upside gap between 25,511 and 25,545 points. If 25,500 points is lost, the next support level is at 25,100 points. Asia's major indexes show mixed performance on the last trading day of 2025, with the Shanghai Composite Index rising slightly by 3 points to 3,968 points, the Shenzhen Component Index falling 79 points or 0.5% to 13,525 points, and the CSI 300 Index dropping 21 points or 0.4% to 4,629 points. Summarizing 2025, the Shanghai Composite Index rose over 18% cumulatively, marking 2 consecutive years of gains in the best performance since 2019. The CSI 300 Index also rose nearly 18% for the year, while the Chinex Index surged 49.5%. The renminbi-US dollar central parity rate was raised by 60 points daily to 7.0288 per dollar. China's official non-manufacturing PMI for December was 50.2, higher than the market expectation of 49.6, up 0.7 percentage points from the previous month, returning to the expansion zone. The composite PMI output index for December was 50.7, up 1 percentage points from the previous month, indicating that overall enterprise production and operating activities expanded compared to the previous months. To optimize the implementation of the 2 new policies, ensure smooth and orderly policy transitions, and meet peak consumption demands during New Year's Day and Spring Festival, the National Development and Reform Commission and the Ministry of Finance have allocated the first batch of 62.5 billion yuan in ultra-long-term special treasury bonds to local governments in advance for 2026 to support trade-in subsidies for consumer goods. They will continue to implement large-scale equipment upgrades and consumer goods trade-in subsidies, optimize implementation mechanisms, and fulfill the requirements for building a unified national market. The notice specifies unified subsidy standards nationwide for vehicle scrappage and renewal, vehicle replacement and renewal, trade-ins for 6 types of home appliances, and purchases of 4 types of digital and smart products. Compared to 2025 and 2026, 2 new policies include: 1. A slight decrease in total subsidy amounts. Since July 2024, consumption policies have been significantly strengthened, with the NDRC and Ministry of Finance allocating 150 billion yuan in ultra-long-term special treasury bonds in July, specifically for consumer goods trade-ins. In 2025, the government continued to allocate 300 billion yuan for consumer goods trade-ins. The first batch for 2026 is 62.5 billion yuan, annualized to 250 billion yuan. 2. Stricter limits on home appliance subsidies. Consumers purchasing refrigerators, washing machines, TVs, air conditioners, computers, water heaters, and other 6 types of home appliances that meet Level 1 energy or water efficiency standards will receive a subsidy of 15% of the product sales price, with each consumer eligible for 1 item per category, and a maximum subsidy of 1,500 yuan per item. In comparison, 225 covered 12 categories of home appliances, but this time excludes household stoves, range hoods, microwaves, water purifiers, dishwashers, and rice cookers. In 225, subsidies were 20% and 15% of the sales price for level 1 and 2 energy or water efficiency products. With a single item cap of 2,000 yuan, each consumer could subsidize up to 3 air conditioners. 3. Unchanged standards for consumer electronics subsidies, expanding the digital product purchases subsidy to digital and smart product purchase subsidies. Individual consumers purchasing mobile phones, tablets, smartwatches, bands, smart glasses, and other 4 types of products. Single item sales price not exceeding 6,000 yuan will receive a subsidy of 15% of the product sales price, with each consumer eligible for 1 item per category and a maximum subsidy of 500 yuan per item. 4. Local governments still have room to formulate policies. Support for smart home products. Purchase subsidies with specific subsidy categories and standards to be reasonably determined by local governments based on actual conditions. In 2025, many local governments chose to subsidize cleaning appliances. 5. Stricter limits on auto subsidies. Subsidy caps remain unchanged, but fixed amount subsidies are adjusted to percentage based on vehicle price. For scrappage and renewal, purchasing new energy passenger vehicle subsidizes 12% of the vehicle price, maximum not exceeding 20,000 yuan, and purchasing fuel passenger vehicles with 2-liter or below displacement subsidizes 10%, maximum not exceeding 15,000 yuan. For replacement and renewal, purchasing new energy passenger vehicle subsidizes 8%, maximum not exceeding 15,000 yuan, and purchasing fuel passenger vehicles with 2-liter or below displacement subsidizes 6%, maximum not exceeding 13,000 yuan. Compared to 2025, under scrappage and renewal, subsidies will decrease for new energy vehicles and fuel vehicles priced below 166,700 yuan and 150,000 yuan. Under replacement and renewal, subsidies will decrease for new energy vehicles and fuel vehicles priced below 187,500 and 216,700 yuan. Major automakers' sales results for December last year are out. Leapmotor delivered 60,423 vehicles in December, up 42% year-on-year. For the full year 2025, cumulative deliveries were 596,500 vehicles, up 1.03 times year-on-year. Xiaomi Auto delivered over 50,000 units in December. NIO delivered 48,135 vehicles in December, up 54.6% year-on-year, with 124,807 vehicles in the fourth quarter, up 71.7% year-on-year, setting a quarterly record. For the full year 2025, total deliveries were 326,028 vehicles, up 46.9% year-on-year. Li Auto delivered 44,246 vehicles in December, down 24.4% year-on-year, with 109,194 in the fourth quarter, down 31.2% year-on-year. XPeng delivered 37,508 new vehicles in December, up 2% year-on-year, with cumulative deliveries of 429,445 vehicles for 2025, up 126% year-on-year. BYD sold 420,398 new energy vehicles in December, down 18.3% from 514,809 units the previous year. Cumulative sales for the year were 4,602,436 units, up 7.7% year-on-year. Geely total sales in December were 236,817 units, up about 13% year-on-year. Full-year total vehicle sales were 3,024,567 units, up about 39% year-on-year, exceeding the annual sales target of 3 million units. Geely stated that the 2026 sales target is set at 3,450,000 units, up about 14% from the 2025 achieved total sales. Among them, Geely brand sales target is 2,750,000 units, Seeker brand 300,000 units, Link and Co brand 400,000 200,000 units. Additionally, the new energy vehicle sales target is 2,220,000 units, up about 32% from the 2025 achieved new energy vehicle sales. Great Wall Motors sold 124,020 units in December, down 8.33% year-on-year, with cumulative sales of 1,323,672 units for the year, up 7.3% year-on-year. Chery Auto sold 232,308 vehicles in December, down 16% from last year. Cumulative sales for the year were 2,631,381 vehicles, up 8% from last year. Biren Technology, stock code 6082, one of the four little dragons of domestic GPUs, will debut on the market today, becoming the first Hong Kong GPU stock and the first new listing of 226. Biren Technology closed at 35.36 Hong Kong dollars in the grey market on December 31st on Philip Mart, up 80.4% from the IPO price. Excluding fees per lot of 200 shares, the paper profit is 3,152 Hong Kong dollars. US stocks fell on the last trading day of 2025, with the Fear Index VIX rising 0.5 points or 3.1% to 14.8. The S&P 500 fell for the fourth consecutive day, down 50 points or 0.7% to 6,845 points. Nasdaq fell 177 points or 0.8% to 23,241 points. Dow fell 303 points or 0.6% to 48,063 points. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, fell 86 points or 1.1% to 7,529 points. For the full year, the S&P 500 rose 16.4% cumulatively, marking 3 consecutive years of double-digit annual gains. Nasdaq benefited from the AI boom, rising 20.4%. The Dow, with lower tech weighting, lagged with a 13% rise for the year. In the second half of last year, the market had some doubts about the AI boom, leading to mixed performance among the Magnificent Seven large tech stocks. Alphabet was the winner, up 65% year-on-year. Amazon lagged, up only 5%. Tesla unusually published analyst delivery forecasts on its website, with analysts on average expecting 422,850 vehicle deliveries in the fourth quarter, down 15% year-on-year, a larger drop than the market's expected 11%. Tesla's annual vehicle sales are expected to decline for the second consecutive year, with average expected deliveries of 1.6 million units, down over 8% year-on-year. On the economic data front, for the week ending December 27th, U.S. initial jobless claims fell by 16,000 to 199,000 due to typical volatility around Christmas holidays, and far below the market expectation of 220,000. Gold prices fell on the last trading day of 2025, but for the full year, gold rose 64%, the largest gain in 46 years since 1979. The rise in gold prices was mainly driven by Fed rate cuts, escalating geopolitical risks, central banks increasing holdings, and sustained inflows into gold ETFs. Silver prices rose nearly 1.5 times cumulatively in 2025, the largest annual gain on record, driven by supply shortages, rising industrial and investor demand. Oil prices closed low on the last trading day of 2025, down nearly 20% for the year. Last year, despite wars, tariff hikes, OPEC Plus production increases, and sanctions on Russia, Iran, and Venezuela, it failed to reverse the oil supply surplus. Our stock pick today is Joyson Electronics, stock code 699. Joyson Electronics is a provider of intelligent automotive technology solutions, offering advanced products and solutions in key areas of the automotive parts industry, primarily automotive electronics and automotive safety. Its products and solutions are diverse and complementary, covering major automotive domains, including cockpit domain, intelligent driving domain, connected domain, power domain, and body domain. The group integrates technical capabilities in areas such as automotive safety, domain controllers, new energy management systems, and human-machine interaction, promoting synergies between these areas to develop comprehensive products and solutions. For example, it provides cockpit driving integrated domain controllers and central computing unit (CCU) that encompass full functionalities in intelligent driving, intelligent cockpit, and connectivity. It is currently secured a CCU designation from a leading OEM customer and will develop and supply the CCU. In 2024, the group ranked 41st in the global automotive parts industry. According to Frost & Sullivan data, based on revenue, the group is the second largest supplier of automotive passive safety products in China and globally. The group's intelligent solutions support functions such as information interaction, environmental detection, analysis, decision-making, and control, enhancing driving experience and safety. Its automotive electronics business focuses on intelligent interaction interfaces and domain control technology, enabling personalized experiences and seamless communication between vehicles and drivers. Meanwhile, the new energy management system segment utilizes intelligent energy management to improve charging performance and battery safety. In automotive safety, the group employs monitoring and predictive analysis technologies to achieve functions such as fatigue monitoring, adaptive safety responses, and automatic protection measures such as pre-collision adjustments. The group has established a platform to truly achieve synchronous R&D, supply chain configuration, production, and sales networks with global OEMs. As of April 30, 2025, the group has over 25 R&D centers and more than 60 production bases in China and overseas markets, covering major automotive markets in Asia, Europe, and North America, with clients spanning over 100 global automotive plants, including the top 10 OEMs in China and worldwide. In 2024, revenue from overseas clients accounted for 74.7% of total revenue. Additionally, from 2021 to 2024, the group ranked first in the China Multinational Companies Top 100 and Multinational Index for 4 consecutive years, reflecting its operational scale. The rise of new energy vehicles has had a significant impact on the group's automotive electronic solutions business, particularly in the new energy management system business, focused on battery management systems and onboard power electronics for new energy vehicles. On the other hand, the requirements for passive safety products such as steering wheels, airbags, and seatbelts are similar for fuel vehicles and new energy vehicles, with no significant differences in basic safety needs. Therefore, the overall growth of the automotive market is expected to promote the development of the group's automotive safety solutions business. At the same time, since new energy vehicles often adopt cutting-edge technologies and designs and require enhanced safety performance to ensure protection for drivers and passengers, this will generate additional demand for automotive safety products. Suggested buy price 18.8 Hong Kong dollars. Target first at $20.5, then at $22. Stop loss at $17.8. I do not hold the aforementioned stock.